Australia. Start of a week and a positive session.
A fantastic session on the Australian share market. In fact, we reached the highest level that we've seen since the 2nd of September 2008 for the Aussie share market, a rise of 0.5%, which is made more impressive given that we did see some China numbers disappointing over the weekend and the Shanghai Composite being down today. Around about $3.5 billion worth of stock being traded. And I think that's a decent effort given that we saw the Adelaide Cup Day, so Adelaide was closed, Canberra Day, we saw Labor Day down in Melbourne and the 8-hour day also in Tasmania. So the fact that we saw so many holidays around the country and yet still saw $3.5 billion worth of stock being traded, I think is a positive.
I mean, it's one that always garners an awful lot of interest. Had a pretty good day out today.
Absolutely. And I guess the thing to remember is that the market is forward-looking. So while we haven't seen the earnings materialise, especially for the retailers yet, the market's looking forward and seeing a cyclical uptick on the horizon, and that's really driving up the retailers quite hard. We have a look at today's session. We saw JB Hi-Fi, Harvey Norman reaching an all-time record high, a 52-week record high. They weren't the only ones. We also saw Premier Investment as well as MYR reaching a 52-week high. In fact, it's an important week for MYR. On Thursday, we see MYR coming out with its half-year numbers. We're expecting to see $88 million there. But it wasn't just the discretionary retailers. We saw an all-time record high for both Woolworths as well as Wesfarmers. And the cyclicals have been running extremely hard. We have a look at just the year to date. JB Hi-Fi, Harvey Norman, these stocks are up by about 45% in the first few months of the year. Of course, with these retailers, a lot of it is around timing. While the stocks have run very hard in the year to date so far, I guess if we have a look at a longer term chart, especially for something like Harvey Norman, this is what it looks like, and you can see that the stock is still down around about 60% from the highs that we saw back in 2007, but the run up has been extremely impressive, and JB Hi-Fi up a massive 45%, as is Harvey Norman in 2013 so far. It's not just the retailers, those cyclical stocks have been really outperforming. We've seen stocks like Southern Cross Media up by 60% in the year to date. We've also seen Seven West Media up by around about 45%, and on the flip side, the defensives, which were the star performers last year, have been underperforming. Telstra is up by 3.7%. That is after a very strong run in 2012. And CBA in comparison is up by around about 13%. So it looks like the cyclical stocks are the place to be at the moment. They're running quite hard ahead of earnings, but the market being forward-looking, looking for that cyclical uptick on the horizon.
Movements, a bit of a downgrade. Stock rises. However, we see some job cuts being announced along with the downgrade. Your thoughts?
I think this is a good example of how the market is forward-looking. CSR today came out with a profit downgrade. They said they're reviewing the carrying value of their Viridian Glass value. Now, if we have a look at the Viridian Glass business, over the time that CSR has held this business, the carrying value has fallen from about $1 billion up down to around about $300 million. Now they're looking at reducing that once again. But the market really looked through that, and we saw CSR shares instead rising. And that's because this is a highly leveraged business. It's highly leveraged to the residential construction space. And if we have a look at that residential construction space, yes, it's been hard, and that's why CSR is looking at downgrading the value in its Viridian Glass business. It's laying off jobs, but the market's now looking towards the future and seeing that cyclical uptick. We've started to see some green shoots in terms of building approval numbers, and on the upside, CSR shares will perform better than the market when we do start to see that uptick in that building cycle. So if we have a look at CSR, this is a highly leveraged play into the residential construction as well as the aluminium space. When the market was falling and when the cyclical conditions were falling, the shares were under a lot of pressure because it's highly leveraged. So that works in a negative way and accentuates a negative on the downside. But of course, when cyclical conditions are rising, that's an extra positive for investors. So it looks like CSR investors looking past the announcement today into the future, and the shares actually rising today.